Accounting standards. This is only an overview. Accounting standards is not a part of the CPT syllabus. It would be covered in detail at the higher levels, but we just understand what are standards, what are the accounting standards, who issues them and why they are issued. A basic understanding and introduction to accounting standards. There are several uses to financial statements, already discussed. Accounting standards, mind you, are compulsory for the company form of business organization. Since there are several users of financial statements, all these users should understand the financial statements in the similar manner. So many companies issue financial statements and there are so many users of these different financial statements. Accounting being the language of business, they should all be understanding, talking the same language. So accounting standards will ensure transparency, reliability, adequacy, consistency and comparability. Accounting standards are certain rules, certain accounting methods and the certain accounting policies and the methods of application of these policies. These are laid down by some regulatory authority in each country. Each country may have their own set of accounting standards. Today, with globalization, with companies being listed on different exchanges in the world, we are trying to move towards common accounting standards all over the world. These are called International Financial Reporting Standards. So while these have not been adopted in all countries, the process is on and slowly it is hoped that most countries all over the world will move to International Financial Reporting Standards so that globally also financial statements become comparable. They are of course mandatory for companies. And what are accounting standards? Accounting standards are written policy documents issued by any regulatory body or expert body. In India, they are issued by the Institute of Chartered Accountants of India. They provide certain standard accounting policies, certain standard valuation methods. They say how certain items have to be presented in the financial statements and they lay down what are the disclosure requirements. In this manner, over the periods financial statements are comparable. Also financial statements of one company can be compared with the other since they are all following similar accounting standards. Accounting standards deal with the recognition of transactions and events. When is income to be recognized? For example, if a contractor is building a bridge over a period of 5 years, so does he recognize income in the first year? Does he, when the contract is signed, does he recognize income in the 5th year when the entire bridge is completed? So when does recognition of the transaction occur? How it is measured, how it is to be presented and what facts are to be disclosed. Largely, all accounting standards deal with these 4 matters. Accounting standard, though, have to be followed by companies. An accounting standard cannot override the law of the land. Accounting standards cannot override the law of the land. For example, though there are accounting standards for, let us say, insurance companies, in India, insurance company, the final accounts of financial statements of insurance companies are drawn as per the Insurance Act, as per the format laid down by the Insurance Act. Accounting standards are in India. They are framed by what is called the Accounting Standards Board, which is under the Institute of Chartered Accountants of India. The Institute of Chartered Accountants of India, they have a committee, a lot of discussion is done, an exposure draft on the accounting standard is prepared, and finally it is formalized. As of date, there are 32 standards. AS8 was an accounting standard on research and development. However, when Accounting Standard 26 was introduced, being a standard on intangible assets, which included research and development, AS8 was withdrawn. So there are totally 32 standards without AS8. Some of the important accounting standards are disclosure of accounting policies is the first one. Next is valuation of inventories. Those of you are familiar, inventories are valued at cost or net realizable value, whichever is lower. But the valuation of cost also is of different types. It may be a FIFO method, it may be a weighted average cost method, etc. So inventory valuation deals with some issues like this. Similarly, there is depreciation accounting, that is accounting standard 6. So accounting standard 1, disclosure of accounting policies, accounting standard 2, inventory valuation, and 6 is depreciation accounting. This part of these two would be covered in later chapters. The entire list of accounting standards has not been listed here. A few ones, more relevant ones and more commonly used ones. Revenue recognition is AS9, when to recognize income. Accounting for fixed assets is AS10. Accounting for investments is AS13. Intangible assets is AS26. As I said before, this replaced AS26 replaced AS8. Provisions, contingent liabilities and contingent assets is AS29. So 1, accounting, disclosure of accounting policies. 2, valuation of inventories. 6, depreciation accounting. 10, accounting for fixed assets. 9 was revenue recognition. 13, accounting for investments. 26 is intangible assets, which actually replaced accounting standard 8. Accounting standard is no longer present. It has been cancelled. Provisions, contingent liabilities and contingent assets is AS29.